Hello everyone. Investors are assessing progress towards ending the Iran war after the US and Iran signed a peace deal, alongside a more hawkish Fed stance following yesterday's FOMC meeting. Oil prices are under pressure, while Japan's Nikkei 225 index has surged to fresh record highs. Meanwhile, Bitcoin remains subdued below the key 65,000 threshold. This is your midweek technical outlook here at xm.com. Now let's get started. Now let's start with the Nikkei 225 index, which has currently crossed above the 71,000 level for the first time, notching a fresh record near the 71,590. It extended an almost uninterrupted six-session rally to hit those fresh records. It's also extending within this ascending trend channel intact since late March, and also holding above this 20-day SMA since early April, which has held as strong support for price action. It is currently penetrating the upper band of this of the Bollinger Bands, which suggests, alongside with this stretched momentum indicators, that there could be a small pullback at these elevated levels before the next leg higher. However, that said, should it resume to the upside, then the next key levels to watch in uncharted territory are coming from psychological numbers, such as the 72,000 and the 73,000. This is also the 261.8% Fibonacci extension of this pullback in February to March. And it signals that price action could hit the next level near the 75,000 area. Now, to the downside, should price action pull back from the record in the upper Bollinger Band, then the next key support level to watch is the 70,000 psychological mark, followed by the early June lows near the 68,100. And then, of course, the 20-day SMA just above the 65,000 area is another key level to watch. As we mentioned, this it has held as strong support since early April, so a breach could dampen momentum, and the slide could then resume to the 50-day SMA near and the lower Bollinger Band, just near the 63,100 level, where this monthly lows are located. Now, overall, the broader sentiment for the index is bullish, with price action well above the long-term ascending trend line, as well above all key SMAs. Now, let's also have a look at oil. Oil is currently extending a six-session sharp pullback from the 20 and 50-day SMAs to trade near over 3-month lows near the 75 level. It's coming comfortably close to the key to testing support at the key 200-day SMA near the 74.33 level. So this is a key area to watch, as a break below would increase the bearish, the prevailing near-term bearish bias. It has already penetrated below this medium-term ascending trend line and has remained subdued ever since. It has retraced to this this rally from pre-war levels to multi-year highs, has over 78.6%. So this downside, it looks like it's gaining steam, though the momentum signals are, with the RSI easing above the oversold threshold, the MACD is in negative. They are suggesting that the pullback could hold for now, although they're not indicating any signs of a bullish reversal. But there could be a pause before the next leg higher or lower. Now, should the price action resume, though, to the downside and break below the key 200-day SMA, the next key level to watch is the 71.20, tracking the March 3rd lows, followed by the 63.73 level, which is the February 26th low, from which this rally occurred. Now to the upside, key levels to watch above the 81.78 area, which is the April 17th swing low, are the 84.63 level, and further up the 20-day SMA is the key area to watch just below the 90 level for a more sustained upside. But for now, there is a bearish pressure in oil. Now let's also have a look at Bitcoin. Bitcoin is also under pressure following this rebound, which in just 2 weeks it's a 12% rebound, which is quite impressive from multi-year lows. It's currently consolidating, meeting strong resistance at the 20-day SMA in the past few sessions. But that said, it looks like price action is attempting to stabilize near the 63,900 level. And should this level hold, then it should protect price action from dropping to the 61,500 level. And then the key psychological 60,000 level, which was held twice this year, protecting price action from hitting fresh yearly lows. And this is an important level to watch and for price action to keep as the broader crypto market is on a fragile sentiment. So keeping these levels are key in order to hold any further declines back to yearly lows near the 59,111 level, which is the monthly and yearly low. Now to the upside, price action though does really need to overcome the 20-day SMA near the key 65,000 level, and further up the 60,000 level and the 70,000 psychological mark. These are the key areas to watch, and of course a break above the 50-day SMA near the 72,500 is key for a more sustained upside and revival of revival of this ascending trend channel, which was intact since early February. So it really does need to break above this area in order for Bitcoin to resume its upside. The momentum signals are reflecting this modest recovery, though they're still holding in negative territory, suggesting though that more consolidation is likely to ensue near this low, near these levels, in the absence, of course, of any major catalyst to push prices higher. Now that's all for today's market wrap. Thank you for watching.